What if I told you a company you've likely never heard of holds the keys to the global economy? Imagine a single entity with the power to influence markets, shape industries, and impact the lives of millions without most people even knowing its name. A company more influential than Apple, more powerful than ExxonMobil, yet shrouded in an almost mythical anonymity. This company operates in the shadows, its influence felt but rarely seen. This is Vanguard, a financial behemoth with assets under management exceeding $8 trillion. To put that in perspective, that's more than the GDP of most countries. Its reach extends across the entire stock market, quietly shaping the fate of industries and influencing the lives of millions. From tech giants to energy companies, Vanguard's influence is pervasive. This isn't a conspiracy theory, it's the reality of modern finance. The power held by Vanguard is both immense and largely unrecognized by the general public. Vanguard, along with its rivals BlackRock and State Street, form a triumvirate of power known as the Big Three. Together, they control a significant portion of the global financial system. These asset management firms have amassed unprecedented influence, controlling a staggering portion of the world's invested capital. Their decisions can sway markets and impact economies. They operate behind the scenes, wielding their power not through flashy products but through the unassuming index fund. These funds, which track market indices, have become the backbone of modern investing, giving these firms quiet but formidable control. Vanguard's story begins with John Bogle, a Wall Street veteran who grew disillusioned with the industry's excesses. In 1975, he founded Vanguard on a radical principle: put the investor first. Bogle's solution was the index fund, a simple yet revolutionary investment vehicle that passively tracks a specific market index, like the S&P 500. Index funds were initially dismissed as Bogle's folly. They promised no outsized returns, no active stock picking, just steady, long-term growth. However, their low fees and consistent performance proved irresistible. What began as a contrarian idea blossomed into a trillion-dollar industry, forever changing the landscape of investing. To grasp Vanguard's influence, one needs only to glance at its portfolio. It holds substantial stakes in virtually every major publicly traded company: Apple, Microsoft, Amazon, Google, you name it. Vanguard is often the largest single shareholder, even in behemoths like these. Imagine the combined market capitalization of these companies. Now imagine a single entity owning a significant chunk of it. That's Vanguard. This vast ownership grants Vanguard immense power, but it's not just about the size of the stakes, it's about the structure of the market itself. Remember the Big Three? Combined, Vanguard, BlackRock, and State Street often control 20% or more of the voting shares in S&P 500 companies. This concentrated ownership concentrates power, raising concerns about market fairness and corporate accountability. Vanguard wields its influence most potently through proxy voting. As a major shareholder, it has the right to vote on behalf of the investors in its funds on crucial corporate decisions. This includes electing board members, approving mergers and acquisitions, and determining executive compensation. While Vanguard often portrays itself as a passive investor, its voting record tells a different story. It has increasingly used its clout to push for changes in corporate governance, environmental sustainability, and social responsibility. However, critics argue that Vanguard's voting practices lack transparency and often prioritize its own financial interests over those of individual investors. Vanguard's immense size and influence have not come without controversy. The company has faced criticism for its tax avoidance strategies, using subsidiaries in tax havens like Ireland and Luxembourg to minimize its tax burden. This practice, while legal, raises ethical questions about corporate responsibility and fair share contributions. Furthermore, environmental activists have targeted Vanguard for its reluctance to divest from fossil fuel companies. Despite its stated commitment to sustainability, Vanguard remains a major investor in the oil and gas industry. This apparent contradiction highlights the tension between profit maximization and ethical considerations in Vanguard's investment strategy. A crisis of capitalism, unraveling the implications. The financial landscape is undergoing a seismic shift, and the consequences are far-reaching. The rise of Vanguard represents a fundamental shift in the nature of capitalism. This isn't just about one company, it's about a new paradigm in the financial world. We are witnessing a concentration of corporate power unlike anything seen before. The scale and scope of this power are unprecedented, reshaping industries and economies. This raises profound questions about the future of our economy and the very nature of competition. How will smaller businesses survive in this new environment? When a handful of firms wield such immense influence, can we truly claim to have a free market? The principles of competition and innovation are at stake. This concentration of power extends beyond the boardroom. It infiltrates every aspect of our economic and social lives, creating a web of influence that is hard to escape. It spills over into the political sphere, as these financial giants leverage their influence to lobby for favorable regulations. This intertwining of corporate and political power is alarming. This creates a dangerous feedback loop, where corporate interests further entrench their power at the expense of the public good. The balance of power is shifting, and not in favor of the average citizen. We are witnessing the emergence of a new form of corporate oligarchy, one that threatens the very foundations of democratic societies. The implications are profound and demand our urgent attention. The illusion of choice. Can we reclaim our democracy? This question has never been more pressing. As citizens, we are led to believe that our votes shape the future, but the reality is far more complex and troubling. The implications of Vanguard's dominance extend far beyond the realm of finance. Their influence permeates every aspect of our lives, from the policies that govern us to the very fabric of our society. They strike at the heart of our democratic institutions and raise fundamental questions about accountability and control. Who holds the reins of power, and who is left to bear the consequences of their decisions? When a single company can exert such a profound influence on the global economy, what does it mean for individual agency and democratic participation? The concentration of power in the hands of a few undermines the very principles of democracy. The rise of passive investing through index funds, while seemingly benign, has created a system where a handful of asset managers wield disproportionate power. This shift has profound implications for market dynamics and the distribution of wealth. This raises concerns about conflicts of interest and the potential for market manipulation. The lines between corporate interests and public good become increasingly blurred. The very structure of the market is now geared towards the interests of a select few. This concentration of power challenges the notion of a free and fair market. This is not a conspiracy but a consequence of unchecked financial engineering. The question remains, can we reclaim our democracy, or is it too late to turn the tide? Beyond the Veil, a call to awareness. The first step towards addressing this power imbalance is awareness. We must shine a light on the opaque world of institutional investors and expose the mechanisms through which they exert their influence. We need greater transparency in corporate governance, stricter regulations on lobbying, and a renewed focus on antitrust enforcement. This is not just a fight against one company, but against a system that concentrates power in the hands of the few. We must demand greater accountability from our elected officials and hold them responsible for enacting policies that promote a more equitable and democratic economy. The future of power, a world of interconnected influence. The story of Vanguard is a cautionary tale, a stark reminder that power often resides not in the loudest voices, but in the quiet accumulation of influence. As we move forward, it is imperative that we remain vigilant, questioning the structures that govern our economy and demanding a more equitable distribution of power. The future of capitalism, and indeed democracy itself, hinges on our ability to address this growing concentration of corporate power. We must strive for a system that prioritizes the interests of the many over the profits of the few, a system that fosters competition, innovation, and genuine economic opportunity for all.